Hi traders, welcome to another episode on the trades we missed last week. So without any further ado, let's move on to what happened on Monday. So we can see a bullish trade as our first trade on Monday. So this is coming from a fair value gap here. You can see this fair value gap on Monday morning, and you see how price bounces off from it multiple times. And also here we do not have any fair value gap here, but you can see how it also tapped into the fair value gap here. So moving on, you can see a very obvious break of structure here that the market created. Now we have our break of structure. So this is indicating that price might want to tap into this area and bounce from this order block here. And given we have a fair value gap, so we can as well use from the start of this fair value gap for our entry. So this is how it is. So using this order block here, you can aspire for a higher risk to reward ratio once price taps into it. Instead of using the fair value gap from here, you won't have much risk to reward ratio. So tighten your stop loss a bit, and you see how price tapped into it for our first trade, for our number one trade. Now this is how our bullish trade would have been on Monday. So your fair value gap and your order block are on point, and now we have our stop loss right below that order block. The next is TP as usual. So this is our take profit, the previous high from last week Friday. So we have our trade like so, and this is giving us a 3.57 risk to reward ratio. You can see how price hits our TP, boom, on it here. So let's put that on that side. So we have our second trade tapping from another fair value gap created by this entry. Now we can agree that there was a tap into a fair value gap on order block here, given our demand area. Now this is also giving another entry. So this is a break of structure after price tapped from this zone. Now we have a break of structure and also a fair value gap. Now you can use this consequent encouragement, which is the center of your fair value gap, for your entry. So this is it, long position here at the center of this fair value gap for higher risk reward ratio. And if price did not hit your center of your fair value gap, fine, you go on to your next trade. But this is going to give you a full-blown take profits, risk to reward. So we have TP right at that same area. So these two trades are coming simultaneously. So we can trade this and also trade this as price moves to the upside, giving you a 2.76 risk to reward ratio for this trade number 2. Moving on to our trade number 3. Our trade number 3 happened to also be a bullish trade. Now we have a fair value gap here. This is the demand area actually. So we can see that price can actually rally from this area because we have a fair value gap and order block here, and as price tapped into this area, bounces up from it, we have a break of structure. How small this is, you can see how price took out this high here and also this fair value gap. So this fair value gap that price has taken can come back to be a reverse inverse fair value gap. So this is a reason to enter this trade. So we have a fair value gap here as usual. Without this fair value gap, we won't enter this trade. So we have a fair value gap here and our order block here. We can use this as our order block and our entry as well. So we wait for price to take out this previous low, our inducement liquidity, and price taps into this area, giving our entry. So we have a long position like so at this spot here, this order block, remember. So we'll put our stop loss right below that order block, and we have our entry here. Our take profit can as well be at this immediate high, giving us a 2.3 risk to reward ratio, or at this spot here before this very fair value gap here. So we can as well use this fair value gap for our TP. Why? Because this fair value gap has a breaker behind it, and this is giving a strong reason for you to take out your profits here. So this is potentially giving us a 2.73 risk to reward ratio. Now on to our number 4 trade number 4. So we have a fair value gap here, and market tap into this fair value gap, bounces off from it. The next is a break of that previous low. We have a break of the low, yes, right here, and if newly formed fair value gap as market tapped from that area. We have a fair value gap here. Let me put it aside. So we have this fair value gap here, and this is a good reason for you to enter this trade as price tapped into this area. So the next is to set our short position, which is our bearish trade, and stop loss right above this high that give us this bearish trade. And the next in line is our TP, since we have our entry as our fair value gap. So our take profit can as well be this swing low here. So this is where we'll put our TP. You can see it, boom, price actually hits our TP, giving us a 3.35 risk to reward ratio. The next is going to be our trade number 5. So our trade number 5 here was a bearish trade as well. So let me put this one aside. So you can see a fair value gap here. Market can as well use this fair value gap at our left hand side, or this one here. This fair value gap was a valid fair value gap here. So market tapped into this fair value gap, bounces off from it. That is our first reason. And the next is a break of structure. We have a break of structure here. So this fair value gap can still be valid, and you want to use a premium side of that fair value gap, which is the top most side of the fair value gap. You can use this breaker for your entry. So at the top of this breaker here, this breaker can be your entry. So as price tapped into this area, you would enter this trade for a sell, for a short position here, and you can see this high would be your stop loss. This is your entry, and your TP would be at this low, 2.36 risk to reward ratio. So this would be your trade number 5. And you see our market rallied all the way to this downside. This would have given you a much more beautiful risk to reward if you know what's behind, what's at your left for your TP. So next would be our trade number 6. Now trade number 6 happen to also be a bearish trade, and can as well see this fair value gap here. This fair value gap would have been a beautiful one if market actually passed this low. So if we have market tapping into this fair value gap here. So this one that taps into this fair value gap would have to go past this previous low. So since it did not go past this previous low, we cannot see it as a valid trade. So there's no reason for you to enter at this fair value gap here, even if the market actually respected it and go buy. So take this one out. So this is much more preferable. So this is a fair value gap, market tapped into this fair value gap, and you can see a run through and market broke past this previous low. So market coming back towards this spot would give you a reason for you to enter this trade. So let's see how the trade would have been. Short position at this spot here. So we have a stop loss here, and what we have our TP right at this spot. So we can use this one, this fair value gap, for our TP. But if we are going to use this spot here, you see our markets ran to stop loss pretty quick. So this would have been a loss. But if you stick to your stop loss hindrances, so we can use this stop loss. We can use this if you stick to your fair value gap, you can use this fair value gap as your reason for you to take out your profit here, because we have a breaker behind this fair value gap. So you can take your profit at 1.46 risk to reward ratio. The next would be our trade number 7, and our trade number 7 was also a bearish trade. Now we can see a fair value gap here, how regardless of how small it is, you can see a reaction from this and still need to fill it up here. So we use this as a reason for you to look at your charts here. This is a supply area coupled with a fair value gap here at this spot. So market tapped into this fair value gap twice. This is first, there was no break of structure here. Market did not break past its previous low. Now we have another tap into that fair value gap. So yes, we have a break of this previous low here, and the next fair value gap that comes after at this spot would be our entry. So we have our entry here at this fair value gap, and you can also see a breaker. So this is a powerful reason for you to enter this trade for a bearish position here, and at the top would be our stop loss. You can take profit here at this previous low for a 1.66 risk to reward ratio, or at this fair value gap here. Before this fair value gap, you can take your profits, and this is giving a 3.55 risk to reward ratio for our trade number 7. Moving on to our trade number 8, we have a bullish trade. Now you can see a fair value gap was tapped into by these candles. The next is a break of structure. Now we have a break of market structure here, and we wait for market to tap into this fair value gap here. So this area would be your area of entry, and so you put your long position here. Your stop loss would be below this previous low that created for us that fair value gap here. So we can use this previous high for our TP, giving us a 1.9 risk to reward ratio, or we can as well use this high here. And this high is giving us a 2.76 risk to reward ratio. For a maximum return, see how price broke above this previous high here, and this is giving us 4.62 risk to reward ratio for our overall TP. Now that was our trade number 8. Moving on to our trade number 9, you see how price tapped into this fair value gap. This is giving a demand area coupled with order block here. Now we have this one tapped into, market tapped into this area, pushed across this high. The next thing we'd look for is a suitable fair value gap for our entry. So we have this fair value gap here. For our long position, we put it here. For our stop loss at this spot here, the high, no, at this spot, this would be our low that created this fair value gap, and this is 2.36 risk to reward ratio for this trade. Let's see if there's a high we need to reach. So I guess there was a high, so we can as well use this high here for our TP. So this would be like so. So this is more realistic. For our trade number 9, we have 3.56 risk to reward ratio for this trade. The next would be our trade number 10. Trade number 10 is coming from this demand area, and you can see coupled with a fair value gap and order block here. So we have market tapped into this area to the upside and a break of structure here. So this break of structure here has already validated this trade coupled with your fair value gap here. So at the center of this fair value gap would be a nice way to enter this trade, even if the market actually taps into this order block here. So for our long position on this trade, put it like this. That will be our entry, and our stop loss right below this low, and our CP would be at this high. So you can see this giving high here. This is giving us a 2.55 risk to reward ratio for our number 10 trade. The last but not the least would be our trade number 11, and that was on Friday. So now we have a fair value gap here. This is a fair value gap. Market tapped into this fair value gap, bounces off from it, created another fair value gap. After that, you can see a break of structure here, validating this trade. So this is our POI, the first one here. So watch market closely. As market taps away from it, then it gives us a break of structure and a fair value gap. This would be our order block here. So we are using this order block, and see how it crossed past this inducement liquidity here. So we have our bearish trade like so. Short position here. Our stop loss would be at this previous high. Our entry at the fair value gap just above the inducement, and we have our trade. So this is our TP. Tap into this previous low here, giving us a risk reward of 4.12, and that was a bearish trade for our trade number 11, a bearish trade on Friday. So stay tuned and let's see on the next episode on the trades we missed last week for next week's trade. Peace.